be above the 10-week, and the 10-week cannot go down any longer. It has to be flat. So there's still a couple weeks away to say that we went from a bear trend back into the SMF qualifier bull trend. Okay, now the thing about this other chart here is that this is the bottom of that same trade, the fear indicator right there, and I've done this chart. That's the support level of the top of that bar is 2196. If we don't break below there, then this move has got not much higher to go. 1120, you'd hit resistance here, you'd hit support. If you start going back up here in the fear indicator, the lower it goes, the more complacency there is in the market. And the lower that it goes, the more bulls are getting back in the market. And new trends, reversal trends start when you get high reversals. When you go straight up, you come straight down. That's gone all the way up to here, 1, 2, 3, 4 weeks. That's when all the fear or all the bears were in up here. And then that's when they change trends. Okay, and new bull trends or whatever are always made at high VIX readings as a standard. However, we're not applying our standard things. What we will apply is this right here. That the lower we go, the more bulls are coming back in the market. Okay? If we don't break this 2196, as I've said before, that's that engulfing bar. That's going to be support over the next couple of weeks. Earnings season is in full swing, and the earnings are quite well. No one said that the earnings were bad. What's going to happen here is that the bulls get all in. Bears were all in up here when we had a big breakout there. And that's when we put in this bottom. That's how short-term bottoms are put in. When you get all the bears in one side, that's when the bull trend starts that upside. Now, just the opposite is, just like we showed over here on our website at stockmarketpunding.com, why we were shorting the S&P is because all the bulls were in. Everyone was in down here. What a complacency, no fear in the market, nothing can go wrong. It's all about the market, mechanical mechanisms, and the next thing they're going to try to do is suck you in, as they did right over here. And they did a good job of sucking you in. Right there. And since then, that 200 week has been falling in price. So what they like to do is make it like the train has left the station, so the money managers have to come off the sideline to get in. And that's what the bull, and that's the mechanics of this S&P. And the same mechanics in any index. I will tell you, though, as a master at this for many years, is that, like I said, all the bears were in up here. And that's when we got the reversal. But then again, when all the bulls were in down here, you went from 1200 all the way down. You lost 200 points on the S&P because all the bulls were in. Well, all the bears were in up here, and that's why you got that. And basically, the next gimmick told is to get the money off of the sideline for the underperforming managers that will feel, oh boy, I got to get in. I'm going to miss the boat. Boy, everything is turned around. Everything is fine and hunky-dory. That's how all that stinking thinking starts. Just be careful. The lower it goes, this cycle here, this was that last cycle that we went long here, and we said the same thing, which got all the bulls in when this was that low. Now we're getting back to a point where there isn't any fear. They don't even care if taxes go all the all-time highs. They're thinking everything is great. But just remember, the mechanical part of it, the mechanisms and the gimmicks that are used. The gimmick here is to get people off the sideline that don't want to be in the market, feeling that the train has left the station, And as we do go higher up in here, we'll go lower over in here, and then we'll get ready to do that short again. But this will be what's behind it. You want to find out more, come to stockmarketfunding.com, because there are very few people that really understand what the mechanisms or the mechanics of this trade is all about. And it's to get you to feel that everything is great and that you have missed a move, and to chase it right on up here again, which could happen. We already told people it could happen. So just to let you know that more bulls get in the market when this goes lower on the VIX, the fear indicator, because they got nothing to worry about until the next round comes again. Stay tuned at stockmarketfunding.com. We haven't missed a top or a bottom yet.